Welcome back. Now it's time for our weekly cryptocurrency and digital asset update with Catherine Murray, financial analyst and the host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your crypto and digital asset update. I'm Catherine Murray. Well, cryptocurrencies have seen major losses this week alongside equity markets as investors' fear of a recession increase. This, of course, follows U.S. Fed Chair Jerome Powell raising rates by 75 basis points this week, on Wednesday specifically. And the market is very concerned that the Fed will be unable to orchestrate a soft landing. So recession fears very much increasing. And that, of course, is taking down risk assets across the board, and of course, including the cryptocurrency world. Week over week, we're actually seeing Bitcoin down by 30%, trading at around $20,000. So a major loss this week, stemming from insolvency concerns surrounding one of the leading cryptocurrency lending platforms, Celsius. That is fueling fears within the entire digital asset and crypto market. The company actually paused all account withdrawals on Monday. They sent out a letter to their account holders on Sunday night, citing extreme market conditions for the reason to pause all account withdrawals. Keep in mind, of course, we've been watching Bitcoin see some significant losses over the past number of weeks. So this is perhaps on the back of that, but it just stoked more fears within the marketplace. As I said, Bitcoin down by 30% this week. Now, they also have a token which is down perhaps by about 50%. Celsius has a token. The company, just for background's sake here, is a very popular regulated lending platform that gives its clients the ability to receive interest on deposited cryptocurrencies and also to be able to take out collateralized loans. So again, one of the world's largest platforms, concerns surrounding it, and that is really causing fears within the overall market. Meanwhile, stablecoin provider Tether, often known by its ticker USDT, is distancing itself from the troubles going on at Celsius and attempting to ease speculation about their commercial holdings. Now, despite all the volatility that we are witnessing, it is always quite interesting to see market participants move into areas that they deem important. PwC, it has a survey out saying that more hedge funds are actually investing in cryptocurrencies right now. Deloitte is also out with a survey which shows that 85% of US merchants surveyed say that enabling crypto payments is a high priority. And we also continue to see some of the investment banks move or develop the markets further. Goldman Sachs, for one, started trading a new derivative tied to Ether, which is the world's second largest cryptocurrency. And MasterCard is now allowing cardholders to buy NFTs on several marketplaces. Also, always important to keep an eye on what's going on the regulatory front. And interestingly here, and not surprisingly, we are seeing the SEC and the CFTC in the United States, and also Europe's Financial Services Commissioner weighing in on Bitcoin's price plummeting. Just to wrap it up here, Nima, I would say, though, that I think people who have been on the sidelines with respect to perhaps buying more cryptocurrencies or even getting into the market are looking at these price declines and thinking that maybe it's an opportunity. I'll leave it there. Back to you.
All right, thanks for that, Catherine. Lots to consider for this week. For more news on the crypto markets, be sure to tune in to Catherine Murray on The Buck Stops Here. All right, in other news, we're going to turn to Russia, where President Vladimir Putin says the country's economy will overcome sanctions that he calls reckless and insane. Mr. Putin began his address today to the St. Petersburg International Economic Forum with a lengthy denunciation of the countries he says want to weaken Russia. He says the U.S., quote, declared victory in the Cold War and later came to think of themselves as God's own messengers on planet Earth. Russia came under a wide array of sanctions after sending troops into Ukraine in February. Meanwhile, China is defending its tough zero-COVID policy. This comes after the U.S. ambassador said it's causing serious damage to the global economy and foreign business sentiment. U.S. Ambassador Nicholas Burns yesterday singled out a 2-month lockdown in Shanghai, China's largest city and key financial hub, as especially damaging. But a foreign ministry spokesperson says China's economy is recovering from the effects of the pandemic and that the zero COVID policy is suitable for China's conditions. Beijing has sought to eliminate outbreaks of COVID 19 with tough restrictions, including lockdowns, quarantines, and mass testing. This while most other countries are relaxing their rules. Up next, more news from around the world. We'll see you soon.